Hey, everybody. Welcome back to Perspectives. I'm Patrice Bobo-Miles, and today I have with me a dear friend. It's funny. It seems like all the people who've been on my podcast have been really good friends of mine. It makes the conversation sometimes flow a little bit better. But this is Shannon Robnett. And Shannon, I would love for you to take a second and just let everybody know who you are.
Hey, Patrice, first of all, I'm honored to be called your friend. It's been, it really is. For those of you that are just listening to her as a coach or something, you really don't know the person that the caliber of person that you're listening to, because Patrice, you are truly an amazing person that I have come to love very much in the short time that we've known each other. But I grew up in a construction and real estate family, and I've been in construction and development my whole life. I do large scale multifamily and industrial. So I've been doing that for the last 30 years. I've ridden the market up. I've ridden the market down. I'm watching what's going on with today's things, and seeing a lot of the similarities from past, but seeing a lot of differences. So, um, you know, we just we are in the business of providing places for people to live and people to conduct business.
Well, I'm going to ask you to break a couple of things down. You and I have very low level conversations about what you do. And we've had some higher level conversations. I like to think that uh, I have learned a lot from you as far as how some of this works. And of course, there's a couple of other friends I'm going to get on here for some additional conversation. But when you talk about multifamily development, what is that?
So we actually build the apartments. So we'll find a bare piece of land. We've got one that we're starting on right now. It's an old warehouse that we're going to tear down the warehouse. We're going to put 175 units of multifamily there over a parking lot. So it will be 5 stories tall. And we're filling a need because, as you know, Patrice, with you know somewhere between 4 and 7 million housing units short in America right now, and rising interest rates, people are not left with a lot of choices as to how they want to live. They're forced to become tenants, but there is the choice of where they want to live. So we're filling that gap, and we do that also in industrial with small bay industrial space where people start businesses. We've got everything from t-shirt shops to gun manufacturers to cabinet shops to ice cream manufacturers. All in these small bay spaces that basically, once your business gets big enough to get out of your garage, because your wife or your husband wants their parking spot back, you come to us and start growing a business there.
So you were talking about the shortage in housing, and yeah, I'm just gonna again, it just kind of goes where it goes. And you're talking 4 to 7 million, and so affordability has become a real issue in the
Huge.
United States. Would you agree with that
Yeah,
statement?
completely agree. In my home market, they just came out with a study that said in Boise, Idaho, which is where I'm from, just in Boise, not the greater MSA, there's 350,000 people, and we need 13,000 units, right? And the majority of those need to be affordable. They're the ones, the affordable price point is what's getting priced out of the market.
Mhm.
And there's a lot of conversations that can happen about how and why um, that that is happening, and how and why we can solve that. But the reality is there's a tremendous need for sure.
Well, with the increase in supplies, and obviously there's still supply chain issues, so it costs more to build today than, let's say, it did even 2 years ago. So, how do you manage to build affordable living units with costs that have increased, recently? It feels like month over month.
Sure, but part of that, Patrice, has been fed by interest rates, right? I mean, if you look at it and you go back to 2012, the bottom of the market, my area, that house was going to cost you $140,000 for a 3 bed, 2 bath, and you were going to get a 6% mortgage in 2012, right? So your payment was going to net out at about $1,500 a month, 1450, 1475. In 2017, you were pushing that price point to 250, and we'd come down to 5.5%, maybe 5%. that price point was still about the same. So as the government, in my opinion, lowered the price of mortgages, we increased productivity. We knew we couldn't build the house today for what we paid for the one yesterday. We knew that wages had to increase, and so the way to offset that was with mortgage pricing. Now that we're swinging back the other way, trying to slow the economy down because of this inflation thing, rates are going up, but housing prices are high. But when housing starts slow down, subcontractors get less busy, and they reduce their pricing. So we've seen on the projects that we're breaking ground on right now, we've seen about a 9% reduction in costs in 6 months. So it has to do with the fact that, people were, I know my framer was hiring anybody with a pulse. And, 5 of his guys on a 10-man crew really wanted the job. 3 guys were there because they needed something, and 2 were there because the probation officer required it, right? And it showed, right? But as they can get rid of those 2 that didn't really pull their weight, the other 3, one of those is going to go. The other 2 are going to improve because they don't want to lose their job, and everybody's going to stop overtime. So now that you've reduced that stuff, you have now created you've created probably a better product because you have 6 guys that really want the job, that really pay attention, and they're going to produce in line with the price point, and you're going to save 30-40% on the price because of the wages.
Mhm.
And so all that translates down to the bottom line that my framing numbers have come from $10 to $8.25, right? So that's a big number. And we're seeing that with other things too. We still see supply chain issues being problematic, but we've seen lumber come from $1,700 a thousand, which doesn't mean much to you, but it's now $5.25, right? So it's come down 300%. And that's based on supply and demand, which is, in my belief, how housing shortages and affordability can be accomplished. That has nothing to do with the government, right?
Uh-huh.
So
No, go ahead. I'm sorry.
I would just say, if you let greedy builders and developers overbuild, you wind up with oversupply. Oversupply brings down pricing, and lower prices make it affordable.
So my question, because a lot of times, because we are talking about affordability, and I know I'm making this real simplistic, and I understand that, because there is more to the production of housing than than the materials that you need, and the architecture of the property itself, and all of that, and that's why you do what you do.
Right.
And I just ask these, baseline questions, and you just give these wonderful answers. Why is it that people, or in your opinion, because this is not something I don't think
Correct.
you can have a definitive
Thank you
on.
for that
You're welcome.
disclaimer. I don't want to get in
You
trouble.
are so welcome. My favorite word is typically. So
Yes, that's right. That's right.
why is it, in your opinion, that a lot of people want to equate affordability to cheap?
Well,
Because I don't think that's fair.
well, to some degree, it is true. Affordability, you can create affordable housing. The problem is when you go out and you build a brand new federally funded affordable housing project and nobody has to pay any rent there, and come back 10 years later, it shows because nobody took care of it because it didn't cost them anything, right? And so typically they build things that will serve the purpose and do the job. One of the things that I've seen is everybody's doing this for profit. Let's just be clear. Even affordable housing developers are doing it for profit. They make money by doing what they do, and there's this equation of rents. Doesn't matter who pays it, rents versus costs, and part of that equation is financing. But there's also that equation of right now, with an undersupply, I can put up a cardboard box and you'll take it because your other option is your car. And that's not a joke in a lot of cases. Sadly, that's not a joke. So people are putting up crap and calling it affordable housing, when in reality, what you need is housing that meets a price point based on adequate supply and demand to keep things level. Because if I'm not having to compete on price, I'm going to raise my rates. If I'm having John down the street running a special because he's got 30 vacancies and I don't have any vacancies, he starts running a special, he's going to get full. Now I'm going to have vacancy. Now I'm going to start running a special. So what happens is this constraint of supply creates additional pressures on that, and it allows people to do the minimum to get the maximum. And that's where, a lot of people are taking advantage of that. But I see that you can create a great product that meets a market need that fits a demographic, and done in a place, in an area that starts out being affordable with how cities process things. If you look at Houston, for example, Houston has no zoning. Okay.
Mm-hmm.
So I roll into Houston tomorrow, buy a piece of ground right next to a cemetery or whatever, right in the middle of an industrial area, and I can build whatever I want without asking the city. So inside of 70 days, I can have a building permit. That makes things a lot cheaper to do, because if I do that in Boise, Idaho, that's a 12-month process. So I've got 12 months invested in that. If I go to New York, California, that's a 3-year process, right? So I've got to get compensated for that time parameter, right? So I've got to buy the land, I've got to hold the land, all of that stuff. So the more government regulation that you put on here, the less affordable it gets. And a lot of cases, the places that are the least affordable are the places that have created the most need, because through regulation, the supply chain has been choked down to nothing, right?
Mm-hmm.
There's nothing being built in LA, right? They have a huge homeless problem.
Right. All right. So, it doesn't cost $200,000 to build a 125 unit apartment complex, right?
Right.
So, we're talking a good chunk of change here. So when you are in the planning stages and you've kind of gotten it drawn out, the number of units, you have an idea of the materials and the finishes and all that goes into that. How is it that you go about getting investors vested in what it is that you're doing?
The thing that I do that's a little bit different is I actually start backwards. So I go into a market and I say, what's the need? This is a great spot. There's a need here, right? I can meet the need. What is that need? They don't need $3,000 units. They need $1,800 units. Okay. So here's my $1,800 units. Then I go to my architect and my subcontractors and I say, we have to design and build a unit that is profitable at $1,800, right? I mean, to me, it's a lot like going to a car lot, right? You don't deserve to be on the Mercedes lot with a $35,000 a year job, but there's a car for that,
Mm-hmm.
right? And so we look at that and we build backwards and we say, okay, this area needs it needs an apartment that's going to cost $160,000 that will rent and be profitable at where we're at. Then once we're comfortable with that, then I start talking to people like yourself that are looking for a place where they can be involved in something of scale, right? Where you can be involved in a 200 unit apartment complex. The last one where we started was a $58 million project, all right? As you know, in lending, the bank wants to see at least 30% of that up front. They want to see that in cash. So I went out and talked to a bunch of people that I know, like, and trust, and believe it or not, they know, like, and trust me. And they became investors on my project, and they became partners in that and became part owners of that, right? So they came in a limited liability partnership and they own part of that. So when we create that, this is the thing that I love about what I do. So I go into a community, most of my investors are in that community, right? So now the profits aren't going to Walmart headquarters, right? They're not going to wherever McDonald's is headquartered. They're staying in the community, and they're staying with average people, right? They're staying with normal people. I mean, I've got firefighters in my deal. I've got doctors in my deals. I've got, I've got just regular normal people that have office jobs, or they have, landscape companies or whatever, that have decided that they don't want to go out and be the owner of this duplex or whatever. So they've decided to partner with me, let me do all the work, and out of that, they get a return. So once we've done that and everybody knows what's going on and we presented that opportunity, then investors join us. And then based on that, we go to the bank and we say, hey, by the way, here's our $15 million, right? And then I sign for all the loans. So I've done that. And then we're able to build the complex. Everybody loves it. We get the profitability, we get the scalability, we get all of that cash flow going right back into the community so that they're spending the money at the flower shop. They're spending the money getting their hair cut. It's all going right back where all those jobs were created, all that housing was created, all that need was met, and then it's pumping it right back into the same community.
And how long have you been doing this now?
Well, I've been in construction and development for 30 something years. We'll just leave it at the something at this point in my life, right?
Okay.
Ish, right? Ish. But the syndicated part where I partner with other people in a large scale like that, I've done a lot of these projects with single check writers, but I've gotten to the point where I really go retail on it and deal with Main Street America over the last 3 years. That's really kind of where that's kind of come from.
Okay, I'm sorry. My I thought I actually thought I just dropped my internet connection. I
Whoops.
apologize. I know that would not be good. Um, talk about throwing you totally off your game. All right, so, yeah, it's okay. We'll get back in. So so basically, this is a form of what's known as syndication, right?
Syndication, crowdfunding, different terms are used, but yes, it's definitely an opportunity to syndicate.
Okay. So I think I'm about to throw you a curveball question, okay?
I would hope so.
So how is it that you maneuver so well in this space financially?
Well,
you already know where the question is going. You are like, what?
yeah. Well, I kind of look like a duck, right? Everything's calm on the surface, but the legs are kicking underneath. And, I've been through hell. I've been drugged through a knothole backwards. I've lived in a truck stop. I have been financially and physically wrecked to the point that I've spent almost a year completely handicapped in a chair, unable to move because of broken knees and backs and necks and all this kind of stuff. And so I'm not selling anything. I'm presenting an opportunity, and that's what's genuine, right? Because what I've done on a small scale of building, everybody goes, well, multifamily, that's got to be really hard. But it's not, because you're building the same thing again and again and again and again on the same site, right?
Mhm.
So you go in and you build a 12-plex, that's 4 units on each floor, 3 stories high, and you have some mistakes and there's some things you correct, and you go start the one next door and you fix that. And by the third one, you know exactly what you're doing.
Mhm.
And so I've been able to really bring people on my journey, right? So I think that's where I bring something a little bit different, because I had put all my money into Wall Street. I had put all my faith in somebody smarter than me, the financial gurus keeping the world going the last time we went around this corner, and it destroyed me. And what
Mhm.
I've realized is that I had to build something better for myself that created something that was a total need. Look,
Mhm.
you can go without getting a manicure, or you can go without, brand new clothes, but you cannot go without housing. Housing is that basic need, and business is a place to do business is that basic need. And creating that opportunity and giving other people the opportunity to invest in that and creating cash flow that frees them from their dependency on their job
Mhm.
or however else they're funding their life is really what resonated with me, that made me, when I started building back in 15, I really, or actually 13, really began to look at, okay, wait, how can I help not only myself, obviously, but how can I bring others along on this journey so that they can find a way to create additional income, even though they might not know how to do a $60 million project?
Mhm.
How can they be a part of that? And how can they find strong financial returns in a true asset?
Quite interesting. So, you talked about basically the crash, the real estate crash that happened, and you said it left you kind of reeling for a period in time there. So, what are some of the similarities that you see with that past market to this market, or are there similarities, or do you feel like the path that we're on now is going to have us back with where that was? Because, again, I have a lot of different conversations with a lot of different people in the real estate sector. I'm kind of vested in what that is.
Right.
Right. I call myself a baby investor. So
Right.
it's not that I'm not paying attention. Of course, I have what my opinion is, but I want to know what yours is.
Well, let's go back to some basics that control a market. One is supply and demand. If you go back and look at 2008, we were really starting to tip over the edge on the supply side. We had more supply than we had demand. That was easing up. We had these really funky loans that people didn't understand that started causing a train wreck. Once that started happening, there became more supply. But what happened was when people were losing their houses, they still needed a place to rent, right? So what I saw there was that, look, housing is essential, right? And now in 9, 10, 11, and 12, we weren't building any houses. So we wound up with a shortage, right? So there's a lot of difference between '08 and today, just as far as supply. Okay.
Mhm.
So on the supply side, we don't have enough. Even with what's happening now, supply in most areas is still not what it needs to be a market in equilibrium. And a market in equilibrium, according to the National Association of Realtors, is typically a 6-month supply of houses. Most areas in the nation right now are still battling with less than a 3-month supply.
Mhm.
Now, we had this astronomical ride to the moon that left us with, $1 million home prices on stuff that was trading at 500,000 just 2 years ago. And that's starting to ease, but you're starting to see the payment. If you look at the payment, where prices are coming down to, the payment is coming up to. So we're starting to see that balance, and people are still continuing to pay more, even though price is coming off. It went from $1 million, it's now down to 850, but you're at a 6.5% interest rate. So your payment is $1,500 more. So that still shows me that demand is healthy, right?
Mhm.
And for those of us that have been doing this a while, ish years,
Thank you.
we know that 6.5%, 7% is still a damn good interest rate.
Mhm.
I mean, look, at 2.5%, I kept telling people this. I wouldn't loan my brother money at 2.5%, and I love him, right? But here we have 30-year guaranteed money. The other thing that we have is in '08, we had a flood of people giving back their houses or selling their houses because they were trying to get out of a mortgage. I think we've created completely the opposite scenario right now. We have a lot of people that can never afford to sell their home because they're never going to get a 3-bedroom, 2-bath with a 2.5% interest rate.
Right.
So regardless of what they want, they will always stay where they're at because that payment's $1,300. And
Right.
congratulations to them for recognizing that and getting in on it, right? But they're going to continue to own that house because to refinance it, they're not going to refinance it. They're not going to, we had a huge refi boom as prices kept coming down. That's not going to happen going the other way. Because if you've got, if you've got a $250,000 house that you bought at 3%, and now you're looking at that house is worth, let's just say it's worth $500,000, and you can get $200,000 in equity there, but you've got to readjust that to a 6.5% mortgage. Your payment went up substantially.
Right.
Thousands of dollars, and you can't afford that differential. So you're going to have equity locked in. So I see that with supply being out of balance, we still need houses, and interest rates going up, the economy is slowing. But I also want to bring a very important fact into this situation. There have only been 3 recessions in America in the history of the United States that have involved real estate, and only one in 2008 that did the damage that it did. The other ones, including this one, have created a slight dip, less than 2%, in the last real estate recession when the dot-com bubble burst. That one only created about a 2% recession in housing prices. We are still today, year over year, housing prices are up nationwide. So
Mhm.
while we're seeing that they peaked in February and started easing off now, we still haven't come down to where they were last October.
Right.
So we still haven't quite hit that loss yet, even though they're less than they were at their highest. I don't think that this recession is going to be destructive like the '08 one was.
Right.
So that's the long answer to a very short question.
No, it's a very detailed answer to a very short question, because when we get into this situation, and there are people who want to buy houses who are like, I can't afford to buy a house. And you have conversations centering around, we are going to become a nation of renters instead of owners. And then you have conversations centering around whether or not it's even smart to buy your own home, which I'll just put it out there. You need to buy your own home if you can afford to buy your own home. Buy your own home.
And I'm going to put it out there that you should not buy your own home, but you should buy a rental and let somebody else pay for it.
And it is so. But and here's the deal. It's called personal finances for a reason, right? It's personal.
Right.
Exactly. And there are those people who aren't looking to get into the investment arena of real estate.
Right.
My husband and I, we bought a home.
Yeah.
Now,
well, and to support that argument, Patrice, for you, where else can you lock in your rent, call it rent, your payment for 30 years? Right. The only thing that's going to change is your sewer, water, and trash is going to go up, and your property tax is going to adjust. Right. So you're going to have less than a 3% annual adjustment in the cost of your living. And if you think it's expensive now, fast forward 10 years, because there's never been a time in the history of the United States again. Yeah, there's never been a time in history where rent prices have gone down 10 years out.
Right. Because rents do have the tendency to increase. So, there are those people, and I am speaking to all of you people who, you just want to own your home. You want to own your home. You want to raise your kids in a home that you own. And when you go, and hopefully, it goes the way it's supposed to, and you precede your children in death, you have a piece of something, a piece of, wealth, generational wealth, familial wealth, whatever you want to call it, that you can leave to those children.
Because you definitely want them to have something to fight.
You want them to have something. And whether they decide to rent the place or sell the place and cash out in what is hopefully equity that you've built, there is nothing wrong with that being a goal.
No, and I completely agree with that.
Yeah, I mean, I have many conversations where I've heard, oh, well, you could do this, and you're absolutely right. We have an investment property for exactly what you're talking about.
Right.
If my property taxes go up, which it looks like it will, my homeowner's insurance on that property has already gone up, and it looks like the HOA dues is going to go up. So what does that mean? It means I'm going to have to raise my rent to maintain a level of cash flow.
Right.
And that property is an investment property, which is there for cash flow. It is also a second property that, once I go and once my husband goes, my son and my daughter have these properties go, well, what do we want to do with this? Right. And we haven't had those conversations about diversifying your investments, and real estate is a great investment. But for some people, to say the home that you are emotionally attached to is an investment, it tastes sour in your mouth. And it does.
Right.
I mean, it just does.
And I just look at it, and this is the thing, my wife and I go round and round about this because I am so clinical in that my definition is simply give me a calculator and I'll tell you if it's an investment or not.
Right.
And yet my wife is looking at it going, but it is an investment. It's an emotional investment. And I said, my calculator doesn't do that. And she says, there's a lot of things your calculator doesn't do that you do.
Jessie is a very smart woman.
Yeah. Well, she made one bad choice, but anyway, but not to belabor the point, but it is something that everybody needs to be owning that asset. Everybody needs to be putting themselves in a position to be in a place that whether or not they, gee whiz, buy a house. And then when you're ready to move up, keep that one and create that rental economy. I mean, I did that. My first 7 houses were done in 5 years, and I kept 3 of them, right? Because I built that, and that's how I got from where I am to where I was to where I am now, was by building that rental portfolio and by understanding that cash flow is what frees you up from your job and allows you to decide. Because look, none of us are going to run on air. We all got to have money to make
Right.
our lives go round.
Right.
And the quicker you can replace the need for you to show up to get it with somebody else doing that, and make it something as basic as housing. We're not talking about Lamborghinis here. That's optional. We're not talking about, do we need the new iPhone?
Necessarily assets either. But
no, but, or iPhones or, Spotify or anything like that. This is an essential item.
Right.
And making that something that is part of your portfolio, I completely agree with you, Patrice, needs to happen. It needs to be on everybody's top 10 list of things to do.
Well, we have come to the end of our 30 minutes. I like to keep these kind of short. And I know that for some reason this didn't populate on your calendar, and you made the time, because I know how busy you are, to pop in and do this with me, which is great, because I actually had to put on makeup to do this.
So did I. That was what took me the extra 5 minutes.
But, I've had a lot of different podcasts, and, thank you for allowing me to be a guest on yours. I'm hoping that, I get a chance to watch what it is. And it was a totally different conversation to what this one is. And I will tell you, this is the first podcast that I've really kind of started to delve into the real estate aspect of things. Mm-hmm. And I knew you were one of the first people that I wanted to have on to jump into this, because you are so knowledgeable, so versed. And we don't always agree.
No, but we still, this is the thing, though.
We don't always agree.
Yeah, we're smart enough to understand that my appreciation of you isn't tied to your agreement with me.
Exactly. Right? Exactly. Yeah. Exactly. So I thank you so much for being part of Perspectives, Shannon. And certainly, I hope that those of you who have tuned in have gotten some little pieces of knowledge and understanding that maybe you didn't have before you tuned into what our conversation was today. And so, I invite you to come back for what will be our next podcast on Perspectives. I hope everyone has a great day.
Thanks again, Patrice.
Thanks, Shannon.